So what I want you to do to practice play with, I want you to start seeing market structure and things of that nature. So I want you to go to Solana on the 1 minute. So Solana USD, SOL USD, USD, right there, Coinbase. Solana USD. You have these drawing tools down here and the little pen thing right there. If you favorite them, this is what will appear up top. You just need the rectangle. You need the arrow. Rectangle and arrow. Those are the only two things you really need. And then that'll be it. Those will be the two things you have up here. So what you need to see is, I'm going to come down here to the rectangle tool. Nope, I'm going to get off it for a second. So I'm going to reset the chart to see what everything looks like. And I'm just going to look here. It's like, what do I see? Well, right now it looks like we're in a downtrend. Originally, when you have a downtrend, you have a, let me use the path tool for a second. You have a push down, then there's a little bit of leeway that comes back up. However far, you don't really know. Generally somewhere about halfway, but sometimes it's less than that. So it came up here, and for whatever reason, it stopped here before coming back down. Now, if price is going to continue down, then in essence, the last time sellers were here to push this price down was this area right here. That's the last time sellers were here. Last time they were in the market. And so with that being said, what you could do is wait for price to come back up there. Or after you get a turnaround like this, if you're like, okay, yeah, I expect price to keep going down, then what you can do is you can be like, I'm going to take an entry when price gets back here. That'll be my entry. My stop loss is going to be a little bit above this area. That way, if price gets here and gives, respects a little bit, maybe it wicks past it, price comes up just a little bit to retest this area, much like it did here. It came up here, for some reason, gapped up a little bit before finally falling down. On the 1 minute time frame, you're going to see a whole lot of this gap stuff. And so don't necessarily buy too much into the gaps. Just look at it for what it is. And then, if this is the downtrend, then this is going to create a new low. So this created a low, then a higher low, or a lower high, and then a lower low. And this is supposed to be roughly an equal high, lower high. So now we're expecting a lower low. So we're expecting price to drop down here someplace. And so that will be my target, a new lower low. And so if you look at that, I mean, even if I were to raise this up and go, okay, I just need a just small little break beyond that. Even if I did equal lows, like the amount that I'm risking, which is this area up here, to the amount of gains is pretty substantial. And so this is how we play it out. And then I want you to send me your what you're looking at. Send it to me. And then that way I'll keep track of them all. We'll start looking at seeing what you see consistently, and then see how we can optimize what you are seeing to something that maybe you aren't seeing initially off the rip. But yeah, so that's that. But this will give you the ability to actually get into the market, watch the market move. It might take 15 minutes. It might only take 5 minutes to actually come to the market and be like, okay, yeah, here's the trade that I want to place. Start up all your lines, take a screenshot, send it to me. If you want to do a screen record and explain it, that works even better. The more you can explain something, even if you don't use it, the terminology is not important. All you have to do is explain it in a way that you understand what you're talking about. Trust me, if you can explain it in a way that you understand what you're talking about, I'll understand what you're talking about. It's not complicated. It's not rocket science. It's actually really, really easy. So that's what I want you to do. Just because I want you to get a little bit more exposure of actually watching this stuff go down. Now, if you wanted to, you could switch to the line chart. Somewhere on here is the line chart. Am I in the right place? I might be in the wrong place. Is it? Yep, okay, cool. So it's the triple dots, at least for me. Chart type, it's right there, line chart. And you'll notice you get roughly the same sort of detail. You get the push down that we have here, the pullback, which is here, that the last point where buyers or sellers flipped came down here, came back, price came all the way up here, the entry would still be the same, the stop loss. So here's the benefit of candles over line chart. Line chart just shows you that it immediately peaked right there. The candle, however, lets you know that price actually went a little bit above it. So if for some reason you had set a market order, a market limit order, and said, okay, if price gets in there, I don't care, I'm gonna sell it no matter what. If you would have set that and set your stop loss where, you know, a little bit above this area here, looking back at this line chart, you would have looked and been like, yeah, why'd I get kicked out? It never actually hit my stop loss. But when you actually go back to the candle chart, you'd realize actually it did hit your stop loss. Yeah, it didn't really hit that area, but spreads and all that other stuff plays into effect. And so you would hit the stop loss. That's so close you'd hit the stop loss. So that's one downside of the line chart. Only for something like this. If you wanted to actually like make it really, really super, super safe, then this is basically what you'd look at. In which case, even if you look at what you're risking to what your potential gain is, you're still way above a 1-to-1, which means all you got to do is be even, break even. You just got to be right half the time, and you're going to end up being profitable, successful, things of that nature. So start doing that and sending them to me. That way we can just get you involved, and just do it whenever you know you can get to a chart, look at it for a second, mark up something. The idea is not being right. I want you to get that out of your head. It's not being right. It's just getting into the trades that make sense and managing them in a way that can also make sense. But the only way to manage them is to actually start seeing what you're doing, and then we can actually work on management. So let me stop there. 7 minutes long. Ooh, that was long.